Hello everybody, welcome to TraderMerlin Show. It is your Monday edition. Happy Monday everybody. I'm sure you're maybe a little bit nervous of the way this day ended. Nice little sell-off around us, two-thirds of the day. Just down Periscope for a lot of markets, so hopefully, well, not hopefully, it was one of those days where normally on a Monday I will sell put options for the next month because they expired on Friday. I actually held back today on the indexes, just didn't quite feel it. I wrote some in one account, but I did some on Draftkings, which I think you guys might find entertaining because some of our listeners have been asking about DraftKings. Anyway, hello Thomasina, Richard, we got Gary, Tom Barr as well, Ivzy, Gino, Big Eb, Terry, good to see you guys, and hello Koja. All right, before I get started with the main focus of the show, which is going to be a trader Q&A, we'll try to keep it rather simple. I have a bunch of questions that came in. I had a guest lined up, and I said, you know what, I kind of want to get to all these questions first. So before I get to the questions, I got to start off with something you guys enjoyed last week. The donkey of the day. Yes. Sometimes there are things done that are so colossally stupid it just makes you shake your head and go, how did these people make it this far? There was an article I read this morning about a guy named Nuke Dizzle, a rapper who basically wrote a rap song bragging about how he was just essentially stealing from the government with unemployment checks and holding up envelopes that are supposedly have the unemployment credit cards in it or ETF cards, debit cards, and bragging about it. It may seem relatively interesting to you that those of you like rock and roll fans like myself who remember a gentleman by the name of Phil Rudd, who was the drummer for AC/DC. Now, if you don't know AC/DC, of course, they're a heavy metal rock band, and they had a song years ago called Dirty Deeds Done Dirt Cheap, which was all about hiring a hitman to kill somebody and just being bad, doing things you shouldn't do. The irony is he was arrested a few years back for doing what? Hiring a hitman to kill two people. I think he did a little bit of community service, and I don't think he really did much time for it. But anyway, this guy's headed down that same boat. Moral of the story, guys, if you commit a serious crime, probably not a good idea to go out there and write a rap song or any kind of song about it. I thought that was just really, really entertaining today, which made it my donkey of the day. I actually have a couple of donkey of the days, but I didn't want to go down the road and make this a whole jackass show. I figured we'd just make it a fun one. So there's your donkey of the day. Nuke Dizzle, unemployment fraud. Congratulations. All right. Thomasina, I'm a big fan of that song too. I love it. All right, I'm going to start things off with a couple of different ones that I don't normally get into. This is one that was from Rick. Now, Rick says Bitcoin Generation, which is BTGN, he says, came up on my scanner as a top stock today. What's your opinion? Now, I'd never heard of this company before, so of course I looked it up and just held my head in my hands and I felt like Seinfeld's dad. I just wanted to or George Costanza's dad, and hold my hands to the air and just yell, Serenity now! Like, really? Why would you even think about this company? Why would you even ask me this stuff? So before you get caught up in the hype, let me show you what this stock did. I'll bring up Yahoo Finance because that actually has a greater representation of what it did today. So let's bring up Yahoo Finance out here, and I'll bring up BTGN for you guys. Here is Bitcoin Generation Incorporated. It's at 15 cents now. It's up 14.99 cents a day, or 149,000% gain in one day. Of course, this is going to come across on a lot of screeners. There's a lot of problems with this one. First off, it's a ridiculously small penny stock that you probably would never have bought anyway. Number two, the volume is so anemic. But we need to go deeper than that. If you're considering buying something like this, you have to look at the details of it. All right, and the simple thing to do, you can go and look at financials. Revenue, 0. So basically, this company's making nothing. They've got $863,000 worth of operating expenses, and then one of the things I really loved about this one, if you clicked on profile, number of employees, full-time, 1. So this is probably some kid sitting at his mom's house in Bartlesville, Oklahoma. All right, he's at Nowata, so maybe they have where's Brendan for this one? I think Brendan would back me up on this one too. If you buy into this one, you will be my donkey of the day. And I'm just not going to call you a donkey. I'm going to call you a jackass, right? It just seems more derogatory if I call someone a jackass, which is a donkey, by the way, so I'm not saying anything rude. This is just unbelievable that people would buy into this thing. Who wouldn't want to have owned it at 0.0001 pennies per share? But look, there's one guy, and let's just read what it does. Bitcoin Generation Incorporated engages in the development of blockchain technology application, cryptocurrency mining, and cryptocurrency trading business. So basically, if you buy it, you're a donkey. If you're the gentleman who did this, you're a genius, right? There it is. Why is he a genius? Because here's somebody that's exactly like me. It's exactly like Brendan or anybody that's got mining equipment. Actually, I don't do mining anymore. I tried it for a little bit, stopped doing it. But basically, all this guy is doing is sitting at home mining Bitcoin. Therefore, in his profile, he can state things like Bitcoin generation, engaged in the development of blockchain technology application. He can say that because by being a miner, you are actually involved in the community that is responsible for writing the blockchain code. I'll bet you dollars to donuts that guy hasn't written one line of code and knows squat about code. He's sitting at home with a mining computer, maybe many of them. On average, I think it was 11,000 shares traded, Joseph, on that specific stock. But he's basically got a miner at home. He trades Bitcoin, which basically means he gets a Bitcoin every now and again, maybe, or a fraction, because he's probably part of a mining pool. And this guy is now all of a sudden, if you look at the market cap of this company, which I believe is a data error, but Yahoo is showing them as having a $4.6 billion market cap. This might be one of the biggest scams I've ever seen. The only time I've seen something close to this was a company called Linux One. VA Linux. VA Linux back in, I think it was 99 or 2000, was going to do a $500 million IPO. $500 million for Linux software, which is, you guys know how much Linux software costs? Anybody know? How much does Linux software cost? If you wanted to go out there and get Linux right now, what should you pay for it? I think I give it enough time, even though there's a weird delay here. The cost of Linux software is free. It's an open source code. What Red Hat did was take a difficult installation process, which is what Red Hat had. It was a problem with Red Hat to install for people who weren't really good with code. So Red Hat took it, a free software, bundled it, packaged it, made it nice and user-friendly, easy to install, and Red Hat is still soaring today. There were a lot of competitors that did the same thing. One was Linux One. The other one was VA Linux. And guys, VA Linux basically bought a copy of Red Hat software, which did all the heavy lifting of making it easy to install. They bought a copy of Red Hat software, and anywhere it said Red Hat, they did a search and replace of Red Hat and replaced it with Linux One or VA Linux. And they were going to do a $500 million IPO. They had $4,000 worth of assets and one person working for the company. Another scam that was shut down by the FTC. Now, Richard Stumpo says, turn him in, Merlin. You can't. So what happens is, it's happening rampantly in the industry, guys. There are all these dead, dormant penny stocks that are just sitting out there that somebody paid money years ago to get registered and get listed and be a pink sheet, and they just haven't made it big time. So what happened with this, most likely, Bitcoin generation, was probably something else. My guess is it was something else, and somebody back-ended into it and changed the name of the company. I'll give you another example. In looking at this one, as I just sit here and shake my head, here's another one. It's BFCH. It's trading at 1.4 pennies. If you buy this, I will come through this screen and punch you in the face. Do not buy this company, guys. I'm using it as an example of stupidity. Here's profile. This is a huge company. It's got 3 people working for it. It's out of Friedrichsburg. And let's see what they do. Profile. Oh, a blockchain company oriented in focus on cryptocurrency markets, engages in currency mining and blockchain consulting activities. Okay, it was formerly known as Purio. Bitcoin Frontier Capital Holdings is based in Friedrichsburg. Right next to this other company, this is the one from Friedrichsburg. So this is another one. It's a very similar boat. You can simply go to financials and look at assets, if they let me. Yeah, this one won't even let me look at assets because they don't have any. This used to be a biotech company. If I'm not mistaken, that might be this next one, which is BTCS, which is was another company as well, a shell company that someone backed in. Has a $4 million market cap. But if we look at financials, let's go look at their balance sheet. It's been around a while. All right, balance sheet shows me that I can't access any information. Isn't that just wonderful? How about income statement? They haven't made any money. They made $4,000 in 2017, 2018 nothing, 2019 nothing. Why would you spend a penny on this? And Joseph's right. He says this is why we teach filters for price and volume to keep you out of trouble. Yes, we do. But when you see a number like this on your screen, plus 149,000% rate of return for a day, even the most cautious conservative person is going to look at that and go, ooh, if I just bought one share. Yeah, these are all pink sheet stocks at this point now. But you'll see this happen all the time. So for the gentleman who asked me, I think it was Rick, what's my opinion? It's not worth it to even take your shares of that company and wipe your butt with it. That's how bad that company is. It's some guy with a simple mining rig, and Brendan is probably far more active than that individual who is running BTGN, which is up 149,000 percent today. Just absolutely nuts. So, first rule of thumb: don't get caught up in a filter or scan. I actually saw this too because I went and checked and see if it was coming up on market scanners. If you go to Yahoo Finance or any market really, you can go to gainers and losers, and it'll tell you kind of the biggest ones. And a lot of people do this. It really quickly, and there you can see BTGN top of the list today. Just it looks amazing, but its average volume for 3 months is 11,000 shares. Or how about this one right below it? Its average volume for the last 3 months is 20 shares a day. It's a $1.25 stock. I mean, why would you ever consider buying? If you bought 100 shares, you would move that market yourself. Some of these numbers I believe are wrong. I can't believe that Sun Art Retail Group, trading at $1.25, has a market cap of $11 billion. I just find that a little hard to believe when a company like Western Digital probably is a $12 billion company. So don't rush too quick to buy into these things. A lot of times they're a scam, a pump and dump. We're seeing it more and more in the crypto space. You might remember at the very beginning when blockchain and all that technology was really hot. Long Island Iced Tea was the one that just cracked me up. They were Long Island Iced Tea, and they changed their name to Long Island Blockchain, and they tripled overnight. 3x in value overnight because they just said blockchain. So that's all you got to do is add blockchain to your definition, and people buy into it because most retail investors, I apologize, are really stupid. They just buy with the headlines. So there you go, Rick. Stay away from that thing. It's garbage, junk. Leave it alone. Move on. Okay, let's see. What's the next question? This one came in from, I think this is, you might actually be in here today, Lori. Lori, who's one of our regulars, sent this one in. It says, why do you need multiple accounts other than retirement versus taxable? You said that you had quite a few. We have 4 retirement accounts between 2 of us and 1 taxable, and I trade in all of them. Okay. I'm probably in a little bit of a different situation than most of you, just simply because of my, experience in the industry and the need to understand all the different platforms out there. And I don't know all the platforms. I can say without an air of cockiness, I probably traded on more platforms than anybody you know, just because I've been doing this for so long. And part of my teaching years ago, I really wanted to understand what are the differences between all these different platforms? What are the commonalities? What's the separation? Which one's faster? Which one's got better order execution? All these factors were critical for me, not only for my own trading, but also in being an educator, because I need to know this industry. I need to master it. And that's when I dive into something, I want to master it. So part of it is I want to understand each different brokerage firm. The main reason is under no circumstances do I ever let an account get over $250,000. My preferred price point per account is $100,000. And this goes back to my general disdain and distrust of all things centralized financial institutions. Things like JP Morgan, things like TradeStation, things like CyberTrader, Ameritrade, E-Trade. Those are all centralized. I don't trust them. So if something happens, they're a necessary evil. I don't want to have a bulk of my money in one location. I'm fearful of that. All right, call me a skeptic, whatever. I'd rather err on the side of caution. So for that reason, I actually wrote down a list of all my accounts today just to tell Lori. I have one account that is pure speculation, right? Through $50,000 in there, and that is my straight gambling account. If I wanted to buy that BGTS, whatever the hell the name of that stupid company was, I could buy $50,000 worth of it. Of course, if I'm going crazy speculation like that, I want it to at least have some logic or reason behind it. It's not going to be just high flyers. I have 3 retirement accounts. One was a Roth. One is a traditional IRA, and the other one is a 401k. So those are 3 different retirement accounts, all with different firms. I have 5 equity accounts. 4 of those are day trading accounts, which are different brokerage firms. For example, I have a day trading account at TradeStation. I have one at Thinkorswim. I have one at, it's at Ameritrade, so Thinkorswim. I have one at E-Trade, and I have one at Charles Schwab. And I had one at Interactive Brokers, but closed that one down just because I don't really like their platform very much. I have 1 FX account, and I have 2 futures accounts. I also have, I guess you could call 2 options accounts because they're different. You have to kind of get permissions. It's a separate account. So technically I have 2 different options accounts and 5 cryptocurrency accounts. So there's most of the reason why. The cryptocurrency, just like I stated, when you go back 3 years ago when I was really diving into cryptocurrency, 4 years ago, I I was opening accounts at all these different brokerage firms to find out who had better execution, who had better prices, what the liquidity issues were. So I have all these. I had more than that at one point. I think I had like 9 or 10 different accounts, but I've closed some of them down. I've been forced to close some of them down because they're international and the U.S. wouldn't allow it. So down to 5. So Lori, that's why. Joseph puts in here SIPC, and that's another factor. But SIPC is generally going to insure you for $500,000 worth of security, so it shouldn't be too bad. I think, if I'm not mistaken, that the Robinhood traders, they should be safe. The money being funneled out of their accounts, they should be safe for $250,000 of FDIC for cash and $500,000 SIPC, which is be security protection. So there you go. Should you have 2 different futures accounts, one for swing trading, one for day trading? Great question, Adam, and that is exactly why I have so many different accounts. Here's the main reason why I think you should absolutely have multiple accounts other than all your capital in one location. And I would maybe put them in different brokerage firms. Here's why. Back in 1998 through 2001, I didn't even say a little further than that, probably 2005, I was a pure day trader. In, out, I didn't want to carry anything home overnight. That was my rule that I stuck by, right? Nothing overnight, because you just never know what's going to happen. And in this day and age, it's even worse. So what would happen is I'd get myself in a day trade, it starts going against me, and you're like, oh, I know it's going up tomorrow. I know it's going to go up. Everything says it's going to go up. So what happens, instead of me getting out of that trade like I should, because the rule for that account was day trade only, instead of me getting out, I would take it home overnight. So now all of a sudden I get hit with a couple of things. Number one, if I'm trading equities, my margin gets cut in half. So I go from 4x buying power to 2x buying power. For those who don't understand, if you don't understand that, type it in the chat here and I'll explain it. But you have different margin requirements if you carry something home overnight. So all of a sudden I'd find that if I had some, I was forced to liquidate anyway because I didn't have enough capital if I was running full margin. So the next day, I'm managing a losing trade. And I might have seen some great opportunities to trade in that account, but I can't because my capital is all tied up in this dog that now is just losing me money as the day goes on. So I made it a rule that if I really like the trade that I'm in, I can close it in the day trading account and I could buy it back in the longer term account where I'm allowed to hold things for days, weeks, months, years. So I want that separation because I made it too many times to count where I take something home overnight with the gut feeling or just the technical price chart telling me it's going to go up. The next day, it rails against me and causes me some pretty significant losses. So those are 2 really important things for me with regards to why you want to have separation of accounts and have different rules for each one. So my day trading rules are very different from my long-term or swing trading rules. Most of the time when I quote you guys, I'm telling you my day trading rules, which are no more than $500 per trade loss. If I lose 3 days in a row, I have to take 2 days off. What are some of the other ones? I got a bunch of rules that I abide by. If I'm in my longer term account, I'm not so worried about 3 losing days in a row because I'm generally going to be holding positions for days or weeks there. So the rules have to be different. As far as percent of capital I'm risking in each account is going to be different. And I think it's great or better for you to set up those 2 different rules so not only can you experiment and practice, but you don't blend the 2 together and start messing with different pools of capital. That makes sense, everybody? I know it seems weird. You're like, well, why can't you just do everything all in one account? I could, and I did for a long time, but it created problems for me, so I took a step back from that, and now I have separate accounts all over the place. One thing I would recommend if you do have multiple accounts, make sure you write everything down because it's a lot of homework to go back and check all these. As I mentioned, I'm looking at, 1, 4, 5, 10, 12, 14. I'm at 19 accounts. That's kind of tough to manage sometimes. Some I don't do a lot of trading in. Some are rather inactive. For one of these, which I'll consider the longer term account, is just basically cash generation. So that's just selling options. For example, today I sold some options on Draftkings. I normally sell monthly options on indexes. I just didn't like what I was seeing today, so I might hold off and do it a little bit different later on. Maybe later on in the week I might sell some, but I sold Draftkings because the rate of return for a 4-day window of time was a little over 2% today. To take a fairly low risk trade that had about a 80% chance of expiring worthless and I keep my premium, not too bad. And those are types of things I try to do in my longer term account. There you go. Arvin says, how do you keep all your accounts straight? Spreadsheets. You know, I have a spreadsheet that knows what all the accounts are. That's the biggest challenge, is knowing, okay, did I have an account there? What's the username? What's the password? All that stuff gets a little bit confusing. But it's spreadsheets, database stuff. Password protected spreadsheets, by the way. Just don't, you know, if someone happens to hack your computer, last thing you want to do is have them access a spreadsheet that has all of your account information. That's a little bit dangerous. My crypto ones is handwritten, by the way. The brokerage firms, and this is kind of an interesting thing just to deal with. We talk about SIPC insurance, guys, which is where the government is going to protect your investments a little bit should something happen. Government's not protecting anything to do with cryptocurrencies. So my trading accounts, my investment accounts, my retirement accounts, those are all numbered accounts that are insured and protected. So I have them in a spreadsheet. Yes, it's password protected, fairly lengthy, I might say. It's a long-winded password. So, you know, hopefully it won't get hacked. Hopefully I won't get hacked. But the crypto ones, I can't risk it. I did not even put those in the same sheet. That's handwritten, and as well as a coding system that I put to change the private keys so that if someone even got a hold of my handwritten sheet out of safe deposit box, if they got that, they still wouldn't be able to get my private keys because I did let's just say a secret code that added some stuff and removed some things, so now the code is slightly different, so no one would be able to use it, but I understand it. So I know the things we got to do to protect our money, folks. Adam says, exactly, I'm attempting to swing trade and get some really good trades on some, but then I cannot day trade the next day because I'm stuck in the swing. Right. So if you just separate those two, now you don't have to worry about it. And the frustration, Adam and others, will be this, that you find yourself in one of those types of trades and all of a sudden you're going, oh, well, I wish I would have bought more, but half my capital's in the day trading account and the other half's in the swing. I wish it was all in one place. You'll always second guess yourself like that. But if you find yourself someone like me who is actively doing all of it, long-term, short-term, intermediate term, doing it all, then it makes sense to kind of start to build separate accounts there. What type of trading makes you the most money per year? I wouldn't say that it's consistent. One year it'll be day trading, next year it'll be the longer-term stuff. I would say maybe I equate this back to stress, right? So which one makes the least amount of stress per year? Without a doubt, the longer term investing, swing trading, position trading type stuff is going to be much more easier on your stomach and your ulcers. But day trading, I just love it. And the challenge with day trading is you end up making a lot of trades. You find yourself making more and more trades than you should, which used to be a factor because commission costs are relatively high. Nowadays, they're not so bad. Okay, let me go back to our questions here. And if you have some, feel free to type them in, guys. I had a couple more here that I want to get to, and then I can go to whatever you guys have. Here's one from Michael, and I thought this was kind of interesting. I've addressed this a little bit. I'm talking about finding things to trade, but Michael says, Merlin, I'm struggling to find things to trade. How do you find good trades? It's not that I'm doing a ton of scanning and filtering. I think that you guys can all appreciate this, that there's too many things out there to trade, honestly. And every day you could always point in hindsight at something and say, that was a better trade. That was a better trade. That was a better trade. But who cares? It's the one that you're in that matters. So I'll show you a couple of resources that I use, Michael, just so you have an understanding of some of the things I use. I've actually built a new scan up here I was going to use for you guys, but it's just not populating fast enough. I never know why TradeStation does this. One of my gripes against TradeStation, I will tell you that. Couple different things. So you guys have seen here with TradeStation, I have a couple filters built in that I really enjoy, and one of those is predominantly going to be used for daily time frames. And all I'm going to do is look for hammers or shooting stars. So I've got no hammers, and let's see, do I have any shooting stars? I have one on DGX. So basically, I'll look at DGX and think to myself, does this look like a potential trade for tomorrow? Honestly, it really doesn't, right? I mean, it's got a shooting star, but it's not really at an area of supply, so I'm probably not even going to pay attention to this bad boy. It's not really going to make my radar. I might also, I don't know if I have that one in here. I don't, unfortunately. I use another filter, which I'll go to this other screen, that I like to use a lot, actually, which is called Bollinger %B. And all this does is tell me how overbought or oversold something is. With Bollinger Bands, I know these numbers are hard to read. I'll bump them up for you. And bear with me a couple seconds as I enlarge these numbers for y'all to see. All right, so the bold. Okay. So I've got average volume on there, and there's your Bollinger %B. Basically, everything you see here with a negative number is outside the lower Bollinger Band, which means not only is it oversold, it's extremely oversold on a daily chart. So I know I can't trade Guild because that's a pharmaceutical company, but right now, if I look at this chart of Guild, I don't see any reason why I'd want to trade this, right? It looks like it's seeking new lows, but I may go and zoom out a little bit and see if this is coming into any area of demand. Wow, that's really interesting. I'm going to make this a weekly, where if I could trade, oh boy, hope you guys all see that. If I could trade this one, I may actually be okay taking a chance at this one. I'd like to see what it does tomorrow, but this might be an example of where I think about maybe buying some calls. You guys can see it's coming right back down to the $60 mark where it hit all the way back in 2018 and that end of the year 2018 and is just revisiting it now. So, this might be one you take a stab at, but not a great looking trade setup. Yeah, it is, right? It's Adam says it's hanging on a cliff. Yeah, it's right there, boy. That is interesting. Look at that. This is the weekly, by the way, guys, just so you can see. I'll make it full screen. I think this is a very interesting chart. But for the better part of 6 years, it has not been able to make it below that line, and it's at it right now. So it certainly looks weak, but sometimes, it's good to go counter trend. You found that floor, and this might be a buy point. So that might be something that I keep an eye on, but I wouldn't call that being an active trade for tomorrow. All right, we got CenturyLink. Okay, it's out below its lower Bollinger Band, but there's really nothing there that I would say is noteworthy. FANG, no, this is not the FANG stocks. It's oversold, but nothing there, right? So I'm really looking for ones that are coming strong into an area of demand, and I'll do the same thing with supply in here in a second. Right now, I don't see anything from a demand perspective that's making any one of these look like a good buy to me, okay? And none of these. Gosh, every one of these was a scratch. All right, so we'll go to the overbought. So I've got WDC, which is Western Digital. Western Digital, if I'm not mistaken, just came out with earnings. So, If it was up at 45 right now, I might look at this one as a potential short for tomorrow, but it's not. Pfizer, can't trade it because it's a drug stock. It did come up into an area of supply where I would actually be thinking about selling right around 38.84. What did it hit today? It hit a high of 38.85. So this would actually be one that, had I been watching this on an old extended Bollinger Bands, looking for a potential short today actually, but now you're a little bit late to it. Autodesk. Okay. What's interesting is this did not come up as a shooting star, but can you guys all see that's a shooting star on Autodesk? I'll zoom out a little bit. So this is the only one out of all these that I'm looking at saying, all right, I might actually look at shorting Autodesk tomorrow. It's had a monster run up. It did break through that overhead supply from early September, but it's got a fairly decent shooting star. It closed in the lower third of it, right near the bottom. So I would just be watching this tomorrow, and if it ended up opening above 259.94, has to open up above it, and then starts to sell off, then I might be entertained. So, I basically, all I do is have a plus column and a minus column, and this would be a minus column, meaning potential short, ADSK. Right? So, Michael was asking, how do you find things to trade? Well, this is one that's now on my radar, right? It doesn't mean it's the greatest trade, but it's a potential. All right, let me see if I got anything else over here. Shooting stars. No, I got nothing. So nothing else has really popped up on those filters. Now, this is all within TradeStation. And there's another filter down here at the bottom. And I believe I've told you guys this before. Years ago, there was a guy I used to trade with. I do remember his name, but to protect the innocent, I'll keep him out. What this guy used to do was, on his screen, he had a watch list of all the stocks that were hitting intraday highs. That's it. Just show me a scan of NASDAQ stocks. At that day, NASDAQ was what was the way to go because of order execution was faster and more efficient on NASDAQ. So he'd have this watch list and says, here's all the intraday stocks that he filtered out for volume. Make sure it had X amount of shares, let's say 2 million shares traded on volume. And he would just simply go down this list. I kid you not. He would just look at it. And if it was, in fact, at the high of the day and breaking through, he would just hit a button and buy 1,000 shares without any other consideration. And he'd go down that list of the top 10 that were at intraday highs and just keep going through that list. So I look over his screen sometimes. He'd have 20, 30, 40 positions open at once. I'm like, my God, what the hell are you doing, man? And he goes, well, what I'll do is I run through this list of stocks that are at intraday highs, meaning they're ripping up, and just buy it because I'm buying momentum. And then once he went through the list once, he'd go through his open position list, and if any one of those were losers, he'd sell it automatically and then go back through that making intraday high list again. And he was just kind of going back and forth. So his whole point was, and it's rather interesting if you think about just the simple math behind it. He was jumping on anything that was moving up and at its high of the day. If it's at the high of the day, that means it broke through a high of the day to get there. So it's traversing up. The stairs are moving higher. He'd buy it, and then after he did a run through these 10 stocks or so, he'd look at his portfolio, and if any of those were going against him, he'd just sell it. Because odds are, on a trending day, he was going to get more that were moving to the upside, and he wanted a bigger basket of those. So he'd end up with, a couple 100,000 shares at one time of different stocks. You're like, oh my God, you're crazy. But it made sense from a math perspective and trend perspective. I don't recommend that, but you can also run filters here. There are things here you have in TradeStation. You have a filter called rapidly rising or rapidly falling. That's another way to find things that are moving quickly. You can also go, they're not really that great. You have some that are approaching 52-week highs and lows, but I don't think that's that big a deal. You do have one here called percentage gainers for the day. I do like this one. However, you can't do a lot of customization, as you can barely see. You probably can't see. A lot of these are penny stocks, which I would avoid anyway. So one of the other things you can do is, let's go to Finviz, right? I'm a big pattern guy, and there was a couple questions regarding patterns. I was going to do a show today on patterns, but I just didn't get a chance to build it. I have to build all these presentations if I'm going to do it for you. So I'll probably do one on trading patterns, but you have a lot of good stuff here as well. And this is all retail and free. You have new lows. So these are stocks making new lows. You have stocks making new highs, which is I generally going to find to be better. It's over here. So you could be running through this scan and filter here for new highs. Let's go just see what it looks like. Of course, this is going to be at a new high. Look at that thing. It gapped up from, what was the closing price yesterday? Previous close. Doesn't give me the data on it, but it looks like it was trading at like 2 cents, and now it's at $7 today. It's up 2,300% in one day. Not too shabby. So those are ones we know we would automatically just walk away from. Here's another amazing looking chart, NTZ, but it wouldn't make my filter because it's under $5. Well, it's over $5 a day. The other thing I like at Finviz, and I've talked about this before, is patterns. I'm a big pattern guy, and you can see down here you've got trendline support, trendline resistance. You have wedges up, down, sideways, triangles, ascending, descending triangles. These are my personal favorites. The only issue I have here is you cannot trust their algorithm. You have to make sure if you look for descending triangles, which are one of my favorites, that you actually look at the price chart and say, are any of these really good descending triangles? Only one I like here is Verb, V-E-R-B so far, because it's making this continuous downtrend. But am I going to short a stock that's $1.22? No, I would certainly not be trading a $1.22 stock. Same here, BTN. This one looks pretty good, right? It's $1.53. So garbage. I wouldn't even waste my time. So most of these aren't going to make your filter, but occasionally you do get some really good opportunities. And I think it also helps you understand what some of those price patterns should look like. For example, you have head and shoulders, you have multiple tops. I'm a big fan of double top patterns, especially as they're approaching double tops. And there's another one here called multiple tops, which is an example of potentially something going sideways. And when it goes sideways, we know there's great opportunity in there. Another resource for you guys to find opportunities is this one. If you don't have access to TradeStation, which has the radar screener, which is phenomenal, you can use Stock Fetcher. All right, for example, let me go to, you can see all these different things that you can compare for. I've always used this for candlesticks. So I'll go, okay, show me some candlesticks. I want to see some shooting stars, and I want them to be above $15. Right? I'm not going to look at a candlestick on a $5 stock. So let's make it 15, and I want at least 1.2 million shares traded on average over the last 30 days. So it fetches the stocks, and here are the companies that they pull up. Now, normally what I do is I just look at the symbols and I put them into my platform. So let me do that for you guys just so you can see what I'm looking at, because does this look like a shooting star? No, these do not look like shooting stars. My assumption is it's focusing on this bad boy. But let me put it over here and bring them up in TradeStation so you guys can see what I'm talking about. So the first one there was AMD. No, this is not a shooting star. So again, we have a piece of software that's not really doing us justice, because that is not a shooting star. You have Fastly, F-S-L-Y. Nope. Now, okay. You guys all, if you've been on this program for any amount of time, you know how I trade shooting stars, right? I've told you guys this over and over and over again. We all can do it differently, but I have a specific rule, which is, God, I wish I would have saw this one yesterday. Beautiful shooting star, whatever day this is. This is the 13th of October. Gorgeous, right? Doesn't come into an area of supply that I noticed yet. But my rule is if it opens up above this and starts to come down below it, great, right? That's where I'm going to look to short it. Well, look what happened the next day. Beautiful. It opened up well above it, and then all of a sudden crossed through it, and the next day, oh, bummer you weren't in that one short, because great. But according to the filter I'm looking at, it says it has a shooting star. That is not a shooting star. That's fail number 2. I mean, these things are very, very, I guess, poorly designed filters. Usually, Stockfetcher was good. There were a lot of really good filters and scans in there. I haven't seen one yet. RPRX is another one. RPRX, it's calling for. That is not, none of these are shooting stars, guys. Not yet, Joseph. Click doesn't do the pattern stuff yet. It's on my list that I've sent in. But wow, every one of these guys, every one of these numbers I looked at here, not one of them formed a pattern. Oh, okay, that's why. Ha! No wonder. It says here, bearish MACD cross. I'm wondering, like, this looks like crap. How does this possibly happen? Let's try this again. Something simple. Moving average cross. I'm going to go here. I want to look for candlesticks. Give me a shooting star. Okay. Oh, there we go. I did it wrong. Perfect. Okay. I apologize. I did it wrong. My bad. And I didn't filter for volume. I just want to waste you guys' time. But now I have some that resemble some shooting stars. Okay. I don't see any that look great for today. Nope. It's probably looking back a few days. Yeah, that was kind of weird. Anyway, these are 3 different resources. Obviously, Stockfetcher looking like it's the loser right now because they don't really, it looks like they have the worst filtering out there. Now, normally, to go back to Michael's question about finding things to trade, generally, I'm going to be trading the same basket, same regular securities, right? So I'm always I know exactly where the Russell, the NASDAQ, and the S&P are at. Those are my bread and butter, so I can trade the ETFs, I can trade the futures if I want almost instantly. When you're looking at Forex, pretty much anything with the US dollar, so not anything, but the majors, 6 major currency pairs I'll be looking at, the British pound, the Japanese yen. I don't really trade the Swiss franc, but it's there. Australian dollar, Canadian dollar, those are kind of the major ones I'll be looking for. So you start to develop a familiarity with those ones, and you don't need to stray too far. You'll always find some kind of opportunity. Options, I'm just looking for something coming down in demand. So let me walk through the Draftkings question. Is that the Draftkings question? I don't know if I actually wrote that one down. There was a question that came in from a viewer. I apologize. You took the time to send it on in, and he'd been trading Draftkings. Do you guys remember what I said about Draftkings? I think you guys might remember DKNG. We had a couple viewers who were asking about Draftkings and what's your thoughts on Draftkings? And I was like, well, look, and that was back here. I'm gonna move the screen over just so I can gloat, because I like to gloat every now and again. You guys remember DraftKings looked like this, right? It went from $30 up to over 60, and I said, well, I'm not bullish on this at all, because someone asked, where's your buy point in DraftKings? And I said, I don't have a buy point in DraftKings. I have a short point in DraftKings, and I short any rally up into supply because this thing is going to die. Why is it going to die? It's going to die because you have 4 sports: baseball, basketball, hockey, and football. Well, hockey's done. Basketball's over. You have baseball is going to be done in a week. Congratulations to my Dodger viewers. I know. And then finally you have the NFL. In the NFL, now all of a sudden you went from 4 sports, which boosted this thing up because sports were shut down for a while. It launched DraftKings way up. Now all of a sudden 75% of those sports have disappeared, and you have football left, which has some question to it whether there may be some skipped games, or may be halted for the season, maybe a short season. Who knows? So, my feeling was this thing's going to get crushed, and lo and behold, it did. Now, that said, there were a couple points where I'd be interested in buying this one. And I didn't buy it outright today, guys. I just used options. I actually sold some puts today, and I'll show you why. I was looking at it from basically this line right in here was where I was interested in potentially buying at 41.97, right? But I went, you know what? It's still too risky for me. So I sold some puts today. Let me get my drawing tool in here, snap that on, at 39.50. The reason for that is, so that second line is basically where I've committed to buy. And that is expiring this Friday. It's a 4-day trade. Now, it only paid me about I had 5 contracts, so it's only paying me about $400, which is really not that much, right? It's still not a lot. But my cash outlay for that was about $19,000. So I'm making 400 bucks on 19,000. I'm going to make about a little over 2.25%, 2.5% rate of return in 4 days. That to me is going in my longer term account because it's looking for steady income growth. But that's what I did on DraftKings today. I just figured since someone asked me about DraftKings, I would share that with you. Why not sell calls? Because I don't like to sell naked calls. I don't want to be forced to buy the security. I'd rather just sell the puts. Sell the puts. I'm collecting that premium, and I'm okay if it gets down to $39.50. One of the reasons for it is there's a lot of open interest at $40 too. So most people are looking at that $40 mark, which is also right below these lows from over here. So I don't think it's going to get to $39.50 in 4 days. If it does, I'm okay with it. I'll figure out what to do with it then. I'll probably sell covered calls on it. Because we do have other sports, as Tom points out. You do have Pac-12 football. You have a lot of other football, but the major stuff that moved it to the upside, which was baseball, hockey, football, and basketball, is now done. So I went to selling puts, and the reason I sold the puts is I would be okay buying it down below this $40 level. It was below my area of demand, which I wanted to buy it anyway, and I was done about 8 o'clock this morning. And you'll see, it was fortunate for me because it started to bounce pretty aggressively. We'll see if this continues on to the upside. My hope is it keeps on going, and I just collect my, my 2+% rate of return for 4 days and do the same thing again next week. So hockey might be January 1st. Are they going to start that season up again in January? Well, that's cool. But bottom line is, I think you can all agree, most of the sports that they were using to help rally them up have disappeared. And that's why you're seeing DraftKings sell off like it has been. So there we go. I believe implied volatility on DraftKings right now is about 100. It's a little high. All right. Let me go to last question. So you guys remember I had Jeffrey Hirsch on the program. Jeffrey Hirsch is of the Trader's Almanac. I love having that guy on. It's been many years since I've had him on. Question came up. You often show the 2014 edition of your Trader's Almanac on your show. Is that still effective year after year? Should you purchase a new one each year, or is it just one you happen to have? Look, I have a couple different versions here. I have Commodity Traders Almanac 2012, 13, and 14. And I have the Stock Traders Almanac, I think it was 2014. You don't have to buy new ones every year. How different are the statistics going to be? What they'll be doing is they're adding in different stories to make it more engaging. The big challenge, of course, if you buy a Trader's Almanac for 14, and it's 2020 right now, the dates aren't going to line up, right? You're like, wait, it's not Thursday, December 1st. It's Wednesday. It doesn't make sense. If that doesn't bother you, then you can get an older version. I think the new versions are like $50. You can get an old version. Last year's expired one for, $5 or so. You can buy them used. It's the statistics. It's the numbers that I'm most interested in and the stories behind the calculation of those numbers. I mean, that best 6 months of the year, it starts in November. I think that's really critical for anybody who's a long-term investor, right? And when you read through the Trader's Almanac, it'll tell you how you can tweak that moving average to get even more optimal entry, and all of a sudden the rates of return for that best 6 months increase significantly. So it's little things like that. I feel like I'm pandering his book. I don't get anything from it, but I do think as a trader, it's probably one of the best, because it's just, we could all, you guys have seen my bookshelf over here. I'm going to take the camera off and show you the bookshelf. I got all kinds of books in here. Just book. Tons of books over there. And most of them I'm not going to read. They're boring as hell. It's the same regurgitated trading information that you've gotten for decades. And I'm like, nah, I don't care. It's stats, it's figures, it's numbers. I got one over here by, Trading in the Zone by Mark Douglas. Great book. It's pretty good. But I don't know. I think the statistics side of it is better for me. I would use the Trader's Almanac as a date book. Yeah, there you go. Sure, why not? Cool. So I want to get that one out, clarify that, because a lot of people have been asking me about the Trader's Almanac, and I do think it is the best book out there, especially for someone who's really into trading. You ask them, do you have the Trader's Almanac? If they don't, then buy them one. It's one of those books I just couldn't put down because I love patterns. I like market psychology. If you're a pattern guy, the Encyclopedia of Chart Patterns is pretty damn good too. I'd have reminiscence of a stock operator in here. I'll just bring that one up for you guys. I got two of them actually. I have, maybe I'll just give one of these away for the viewers. I have the two of them. I've got both. I like this older one. It looks nicer. Kind of a cool reminiscence book. But yeah, I got it twice. One was given to me. I bought the other one. But I still think it's one of the best trading books simply because it's psychology. And for for those of you who don't know or may not know, trading is all about psychology. Big Eb says, "Where's the one for Merlin?" You know what? I hope just keep bugging me because I get so bored with it. You think I would have done it during the pandemic is finish my book, but I have not finished that damn book. I just get frustrated writing it, so maybe I will. I'm gonna get on it. All right. Any last minute questions, guys? I'm gonna go to the economic calendar and earnings for tomorrow. If you don't have any other questions, if not, I will keep on rolling here. Let's see. What was the other good one? Somebody recommended Sun Tzu's Art of War, and there's actually, you can go, if you type in artofwar.pdf in Google, you can find tons of different versions. There's one that someone took and converted it to trading, which I thought was kind of interesting. But I actually found it better to just read Sun Tzu's Art of War as is, as a military, Trieste, I don't even know how to pronounce it right. And then in your head, apply it to the markets. Because that I find for myself, I'm always trying to say, okay, what does he mean by that strategy? Okay, how does that tactic that they're using in a military conflict, how can I relate that to my personal trading? And I feel like you start to build an understanding of your personal psychology and how you should approach the market. So I actually do like Sun Tzu's Art of War. All right, Zeus says, if you only have one share contract when the market goes in your favor but not meeting the target yet, how do you manage the emotion of taking the profit too early? Well, one of the things you can do, Zoo, is you can be systematic, right? You can be systematic about it where you just move a hard stop up, because one of the worst things you want to do is be in a nice winning trade. You're even one contract, whatever increment you have, and you're doing great in it, you're making good money, and all of a sudden it rips against you and it stops you out and you have nothing left. That's one of the worst things that could happen to you. It's absolutely demoralizing. So I would rather have the embarrassment maybe or the emotional challenge of taking profit too early than giving all my profit back. So always keep that in your head. When you get pissed off at yourself because you got out too early, just remember you took profit and it could have ended up with a loss. So you can be systematic about it one of three ways. You could do a physical hard stop that you literally move up according to the price movements up, or if you're short, move it down. You can use trailing stops, and those trail stops come in one of two ways generally, which is going to be a percentage trailing stop. So those that might not know what that means, let's say your stock's at $50 and you set a 1% trailing stop, it's going to be 50% off the highest point that it reached. So if it moves up to 50 and then starts selling off, it would be 1% off of that $50 price point. If it gets to 60, it keeps on rallying, well, now it's going to be 1% off of 60. So as it goes up in price, your percentage stop is going to get a little bit bigger dollar-wise, because 1% of 50 is less than 1% of 60. The other way to do it is off of a set increment trailing stop. So let's say it hits $50 and you know what, I don't want to give back more than $1. Great. Set a trail stop for $1 and let it just run from there. So those are ways that I would do it, Zoo, that's how I'd manage the emotion side of it. And you just have to understand, just commit this to your memory, please. You will very rarely, if ever, get out at the dead high. It's so rare. It's like picking the dead low. I have done it before, and when you do, you're like, I'm going straight to the liquor store and I'm buying some lotto tickets, because that was rare. You're rarely going to do that. So don't sweat leaving money on the table. That's part of doing business. Be happy with it. Adam says, that has been my issue with swing trading. Had an almost 20% winning trade going for me. I moved my target to a further target, hit my first target, and I got left holding the bag. It sucks, doesn't it? Because you're like, not only do you feel like you're a loser because you got stopped out. No offense, Adam. I'm saying this not condescendingly. I've been there. But you feel like a loser because you got stopped out. But then you look at all the money that you had. You're like, man, I gave it back 20+%. Why didn't I just give back 5% and keep 15 of it for myself? That's the challenge we have as traders. No one wants to take a losing trade, but sometimes you just have to, and understand that there's going to be a stair step up, and sometimes we mistime those stair steps down. It takes you out too early. So what? You made a profit. Also, the Book of Five Rings and the Unfettered Mind, from the Zen Master to the Sword Master. I never read that one, Domesticated. I haven't heard that one before. You got a new one for me. All right, guys, that's going to do it. No, it's not. Actually, I told you I was going to do the economic calendar. It's not about the economic calendar for tomorrow. And if you guys saw the Monday Market Must-Knows, I would encourage you to check that one out. There is an error in there, by the way. When I built it out, it said that Thursday, Amazon was reporting earnings. All of a sudden, that got moved to the next Thursday, the 29th. And that month, boy, I tell you what, that Thursday, you have Apple, Amazon, Facebook, and Twitter, and I think another one, all reporting earnings the same day. That's going to be a nuts of a day. Anyway, here's what's happening for tomorrow. In the Monday Market Must-Knows, I talk about housing starts and how critical housing is to GDP, right? It's 15 to 18% of GDP. This will give us a good indication as to if that sector is still improving and bringing up our GDP. Building permits and housing starts are expected to rise tomorrow. Any surprise there could further exacerbate this little sell-off that we have. What else do you have? Really, for the UK, it's what I call Magnum PI Day, which is CPI, PPI, and RPI numbers coming out. Other than that, not too much. Here's the big story for tomorrow. It will be our official... Ooh, I'm going to do it this way. We'll have Lockheed Martin, Procter & Gamble, you have Snap, Texas Instruments, and Philip Morris all reporting earnings tomorrow. And then... Oh, look at this. We get to do the first one for the month of October. The popcorn trade of the day, folks. Yes, popcorn trade of the day, believe it or not, is going to be Netflix. Tesla's is the next day. But there we go. Netflix reporting earnings tomorrow. That is after market close. What that popcorn trade of the day means is grab yourself a bowl of Orville Redenbacher popcorn, put your feet up on your desk, set your chart to a 1-minute time frame, and show that 24-hour trading. And then sit back, do not trade Netflix, just watch it go crazy, and you're going to be going, I wish I was in this thing, but no, you don't, because your ulcer medication couldn't cover that big of a hole in your stomach. Anyway, that will do it for me, for everyone, for today. Tomorrow, I don't know if I have a guest. I'm going to try to get someone on the program for us. If not, I may make it a pattern show. If you have comments, questions, feel free to send those on in at TraderMerlin.com. You can send me pretty much anything there, or just go ahead and leave your comments down below the video. Of course, you guys have seen all the chat that goes down below the video. Some of it's good, some of it's bad. I don't care. I take away all the spam, but I love your comments down below. Also, give me a thumbs up. Until then, happy trading, everybody. I will see you all tomorrow.